Don't worry. You're welcome. You may not understand. He's making a way even now. Hello, how are we doing today? Happy Sunday. And if you're already in Monday where you are, happy Monday. How was your day? How is your week going? My day was fine. I had enough of time to rest today. Yes, I had a lot of time to rest today. How about you? How was your Sunday? And how is your Monday if you're already in Monday? Yeah, good evening, everyone. I'm still in Sunday where I am. And I'm going to be talking about the stock market today. How can you start investing in the stock market? That is what we're going to be looking at this evening so that you can start making income from the stock market. Okay, so you're welcome to the live broadcast this evening. My name is Sifawu, and I currently reside in Canada. So if you want to tell me where you're joining me from, that would be very lovely. You can just put, oh, I'm joining you from this place, so I know people that are on this call this evening. Like I said, you're welcome this evening. So let's dive in. We're going to be looking at the stock market. But before we look at the stock market, is there anyone that would like to earn rental income? Rental income is income that you earn from rent. Like you want to have an investment property and you would like to earn rental income. If you're one of that kind of person, you can just put one in the chat. I like to earn rental income, because that is what we're going to be majorly discussing this evening. I want to earn rental income. Can I see one in the chat? You're welcome. You can just help me like the live so we can have more people come into the room, and you can share it with your family and friends as well so we can have more people come into the room. Do we have anyone that wants to earn rental income on the call today? Okay, so I see one from YouTube. It means that we have people that want to earn rental income, right? Now, why do you want to earn rental income will be my first question. Why do you want to earn rental income? Why do you want to earn rental income? Why do you want to earn rental income is my first question today. Sent you a request to be on your live video. Okay, let me see what you want to say. Shine 20. Let me see. Why do you want to earn rental income? Okay, so why do you want to earn rental income? We want to earn rental income because it becomes a source of our income, right? It becomes one of the sources of income that we have. And when you're building your income sources, investment in real estate is one of the sources of income we should have, right? Because it just comes like almost like passive income, because you invest once and you can keep getting returns over time. Now that we know why we want to earn rental income, because we want to include it as one of the sources of our income. However, before we start any rental income, right? There are certain things that's rental income. Before you start any rental income, there are certain things you would need to do, right? You will need to get a property. For you to earn that rental income, you will need to get the property. Lady Shit Down says, I want to invest. You're welcome. That is what this evening I'm teaching you how to invest in the stock market. 3 simple steps. And if you stay to the end of this class, I can tell you that you will be able to start investing. That is what we're doing this evening. So you're teaching you the 3 simple steps you can start your investment journey with today. Okay? So I'm going back to what I was saying. Before you start any rental income, you will need to get a property, right? And before you get a property, what are the steps you need to take to get a property? You will need a down payment, right? You need a down payment to get a property. You will need the closing costs to get a property. You will need a good credit score to get a good interest rate from the bank. So you're not paying too much on interest rate, right? At least these three: down payments, closing costs, good credit ratings, for you to get a good interest rate. These are the things you need to put in place before you can say you want to buy a rental property, right? Now, when you look at the down payment you're looking for is not like 10,000, it's not 20,000, it's not 30,000. So most times it takes you years to save up that down payment. Might take you 2 years, might take you 5 years, might take you 10 years for you to save that down payment. Remember, the dream or the goal is to have a rental income, right? That's our final goal. Now, before we get to that final goal, we have steps to take. We need our down payment, we need our closing costs, we need good credit score. This might take us 3 years, 4 years, 5 years to achieve this dream, right? It might take you those number of years to achieve the dream. However, if you can achieve this same dream today, you can achieve this same dream today by going through the stock market. By going through the stock market, you can achieve the same dream. And I'm going to explain it. That's what I'm going to be explaining in today's life, right? How do you now achieve this dream, this 3 years dream, this 10-year dream of having a rental income? How do you achieve it tonight? Is what we're going to be saying on today's life. Okay? Now, so the first thing you want to do is, now we know our end goal is to get rental property, to get income, right? Now, are you familiar with, if you're in Canada, you'll be familiar with Winners, right? You'll be familiar with Walmart. Walmart is in Canada, Walmart is in US, Walmart is in, I'm not sure if it's in Europe though. Walmart, you'll be familiar with Walmart, right? Is anyone familiar with Walmart? You can just put one in the chat. Let me be sure people are familiar with Walmart. You know Walmart, put one in the chat. You're familiar with Walmart. Walmart is the supermarket now? I don't know. Let's engage now. Put one in the chat. Oh, nobody knows Walmart. Okay. If nobody knows Walmart, okay, are you familiar with Home Depot? I don't want to believe nobody knows Walmart though. Are you familiar with Home Depot? Are you familiar with Home Depot? Are you familiar with what other stores can cut across US and Costco? Are you familiar with Costco? Okay. Nobody is answering, but I want to believe these names I have mentioned, we are familiar with at least one of them. So why am I saying this? I'm saying it because Walmart, Costco, Winners, Target, they all pay rents to somebody. It might not be an individual, it might be a company, most likely a company, because they will rent the warehouse, right? The store where they are using, they are going to rent it and they will pay rent to the landlord, right? They'll pay rent to the landlord. Remember, our end goal is to get rental income, right? Now that they are paying rent to that landlord, right? The landlords are saying, I need people to invest so that I'm able to get more properties. I need people to invest in my company so I'm able to get more properties, so that I can give it to the likes of Costco, to the likes of Walmart, to the likes of Target. I can give these properties to them as rent. It might be hospital buildings, it might be casinos, it might be shopping malls, right? I need people to come invest in me. And what will these companies do, right? What will this company do? These companies would go to the stock market and list their stocks. They're going to list their stocks on the stock market, waiting for you and I that have the dream of getting rental property to invest in those stocks. So that when you invest in those stocks, they are able to get more property. Now, when they get this property, right? They get the properties, the high-rise buildings, the lights, right? They put tenants into it. Every month, this tenant pays them, or maybe yearly, the tenant pays them. What do they do in return? When this tenant pays them, what they do is now to pay you dividends. They will pay you dividends. Remember, when you have a physical property, you're going to be getting rents, right? When your tenant pays you every month, you get your rent. You get your rent every month, right? Now, when you invest through the stock market, You will also get dividends. This dividend you're getting from the stock market becomes your rent. It becomes your rent because the dividends you're getting, you can either get monthly, you can get quarterly, you can get biannually, right? Depending on the stocks you buy. That becomes your rent. You've been able to achieve one of your dreams. When you have a rental property, a physical property, the next thing you do is you want to sell it at some point, right? Maybe if you don't want to leave it as inheritance, you want to sell it at some point. When you're selling because you know that the value of this property has actually appreciated. The value has grown, right? The value has grown, so you want to sell. When you sell, what happens? You make a gain, right? You make a gain. It's the same thing. It's applicable to the stock market because the stocks you buy would appreciate in the market as well, and you're going to sell at some point and you make a gain from the sale you've made. Now, I told you you're going to get dividend. Dividend comes every month, every quarter, or every year, or every biannually. You get your dividends, that is your rent. You'll be able to sell your stocks at the end of at some point, you'll be able to sell your stocks. And that becomes the gain you make in the market, right? That means you'll be able to achieve your dream. The goal is to have rental income, to have investment property, right? You've been able to achieve this dream, just that you did not go the traditional way, right? You didn't go the traditional way. Now, if you're buying a physical property, the mindset is not that you're going to sell in 1 year. The mindset is not you're going to sell in 2 years. The mindset is not that you're going to sell in 3 years. You're buying a physical property, you're going to be holding. Maybe you might have 10 years in mind, 15 years in mind. That's the same way you're going to treat your stock in the market if you want to make money from the market. You're going to treat the stocks you have in the market as a physical property. You're not buying today to make 100% return tomorrow. You're buying with the intention of holding it for a period of time before you sell, right? Because if you have a physical property, that is the same thing you're going to be doing with your physical property, okay? But when you now go to the stock market, the difference between the stock market and your traditional real estate, when you go to the stock market does not care about the down payment. Thank you for the follow, Rosie Chin, right? It doesn't care about your down payments. If you want to get a physical property, you need a certain down payment depending on the amount of house you want to buy, right? Depending on the value of the house you want to buy. But when you go to the stock market, it doesn't care about your down payment. Any amount you have, you can invest in it. The day you have $100, you can put it in it. The day you have $20, you can put it in it. The day you have $1 million, you can put it in the stock market, right? Number two, it doesn't care about your closing cost. It doesn't care about your closing cost. Start with whatever amount you have. Number three, it doesn't care about your credit score. When you go to the stock market to buy stocks, nobody cares about your credit score. Remember, when you're buying a traditional real estate, I told you need the down payment, right? You need a closing cost, and you need at least a good credit score to be able to get what? To be able to get a good rate. But when you go to the stock market does not care about any of these three. It doesn't care if you have any down payment. It doesn't care if you have a closing cost. It doesn't care if you have a good credit score, and you will still be able to achieve the dream of you getting rental property, of you getting rental income, because these companies will pay you dividends. Dividends will be your rental income. The company would also appreciate in the market, which means you will get capital gain by the time you decide to sell your stocks. Can you see how we can achieve our dream of getting rental income through the stock market? Would you like to be a landlord to shopping mall? Just that I don't have that much money to go to the shop to buy a shopping mall, but I can go through the stock market and be an investor in a company that owns shopping mall, right? An investor in a company that owns shopping mall and still be able to achieve my dream? Would you like to own data centers? Data centers. Yes, if your answer is yes, but I don't have the capital right now to get those data centers, but I can invest in a company in the stock market that already owns data centers, and any money they get from that data center as rent, because I'm an investor, I get to get part of it. I get to get out of it. And that is how you achieve your dream. You don't have to wait for 10 years. You don't have to wait for 15 years before you buy that rental property. You can achieve that same dream through the stock market. And that is what we're going to be discussing today. How can you achieve the dream? I've told you the ways, right? What you can, I've just tried to break down traditional real estate and you investing through the stock market. Do you understand? Or do you want me to repeat myself? If you want me to repeat myself, put 1 in the chat. If you understand, just say 2 in the chat. Do you want me to repeat myself? 1 in the chat. If you're good, tell me 2. Can you please let me like the live? And if you can share, that would be lovely so we can get more people into the room. Thank you, thank you, thank you. And please, let's make it engaging. If you have questions, you can leave it in the chat. I will definitely read your questions and try to answer to the best of my ability. Okay. Now, so like I said, we can achieve that same dream. Now, how do you achieve it? Because I've told you that you don't need to wait for 5 years. You can do the same thing through the stock market, right? How do you now achieve this dream? And I said I'm going to be telling you three simple steps for you to start investing in the stock market. Number 1, okay, before we go to how do you achieve that dream? Now, if your dream is to get rental income, underline the word income. If your dream is to get rental income in the market, you're going to be looking for stocks that will pay you dividends. Rental income. Income means like what comes to your pocket regularly, right? You're going to be looking for companies that will pay you dividends, right? If your dream or your goal in the market is to grow your capital as soon as possible, you're going to be looking for companies that their capital would appreciate. There are 2 different types of stocks. I just mentioned dividend stocks, the ones that pay dividends. There are so many stocks that pay dividend, but you need to look for a good dividends paying company. You don't want to stay with a company that is paying 0.5% if your goal is dividends, right? Your goal is income. If your goal is to get growth, you want to grow your capital fast enough, you're going to be looking for companies that are into growth, that their capital are appreciating as fast as possible, right? Do we understand? Because you need to know the reason you're going into the stock market. This will help you to select the stocks you want to buy. It helps you to select the stocks you want to buy. If you don't know the reason you're going into the stock market, oh, Mr. Lance, thank you so much. Thank you for the Ask Me and thank you for joining us this evening. How was your day? Right? So, if you don't know the reason you're going into the stock market, you're going to lose focus and you tend to lose money because you don't know the reason. If I'm going to the stock market to get dividend, to get income, and I'm buying companies, oh, it was fine. We bless God. Thank God for that. And I'm buying companies that don't pay dividends, I will be frustrated and do what? And leave the stock market because I don't have a reason. Why am I going into the stock market? Now, if the reason is clear, I'm going for income or I'm going for growth, your reason is clear to you, then we can start the process of us buying our very first stock, okay? Of us doing our very first investment. Now, step 1, I told you it's 3 simple steps, right? Step 1, you want to open a brokerage account. What is a brokerage account? We have heard about brokerage accounts, right? A lot of us have heard about brokerage accounts, especially on the social media. But what is a brokerage account? What is a brokerage account? Do we have anyone that knows what a brokerage account is? Okay. So I just hope I'm not talking to myself, because I can see people on this live, but no one is answering me. That's fine. But I just hope you're learning something. That's the most important thing. And if you can help me like the live, I would really appreciate it. Thank you so much. Okay, a brokerage account is an account you use to buy stocks from the stock market. If you want to invest in a company, let's say for instance, you want to invest in Amazon, you can't just walk into the head office of Amazon and say, oh, I have this $10 or this $10,000. I want to use it to invest in your company. You have to go to the stock market and buy that stocks, the stocks of Amazon. But how do you go to the stock market? Because you can't just walk into the stock exchange as well and say, I want to buy stocks, right? You need a brokerage app. The brokerage app becomes the middleman between you and the stock market. Now, what is the stock market? Right? Let me know. Assume people understand what the stock market is. What is the stock market? The stock market is where companies looking for investors. Thank you so much, sir. You said an account that can buy stocks, bonds, and ETF. Thank you, Mr. Lance. Right? The stock market is where people go to invest in public listed companies. A company has gone to put their stocks in the stock market. You go to that market to buy it. So it's where we buy and sell stocks. You buy and sell stocks in the stock market. Now we know what the stock market is. Now we know what a brokerage account is. Thank you for the like, sir. Now we know what a brokerage account is. Now, depending on the country you're in, there are different types of brokerage accounts. Different types of brokerage accounts, right? I'm going to be giving you a few. If I don't mention the country you're in, if you put it in the chat, I can tell you the kind of app you can use in your country. So if you're in Canada, you can start with Wealth Simple. Wealth as in money. Simple, right? Wealth Simple. If you've not downloaded your Wealth Simple and you want to download the Wealth Simple and you need a referral code, you can just put it in the chat and I will give you my referral code. When you use my referral code, you get about $25 that helps you to at least start your investment journey, right? $25 free if you fund your account within 30 days. But if you need it, you can just say, I need your referral code and I will put it in the chat. Thank you so much for joining us on YouTube. Thank you for sharing the live. Thank you, sir. Now that you know what a brokerage account is, I said if you're in Canada, you're going to be downloading, thank you for the follow. You're going to be downloading Wealth Simple. Thank you for the follow, Ashabon B. I hope I'm right? Wealth Simple is very beginner friendly. A grade 6, a grade 8 is able to follow through how to download it. You're downloading it from your Play Store or your Apple Store. If you're in the US, you're going to be downloading Robinhood or Fidelity. You're going to be downloading it. If you're in the UK, you're going to be downloading, thank you for the likes, you're going to be downloading Trading 212 if you're in the UK. And if you're in Africa, we're going to be using Bamboo. Bamboo, if I did not mention your country, let me know in the chat. Okay. Now, when you download this app, you know that's the first step, right? You need to create your profile on this app. You need to create your profile. What do you need to create your profile? You need your name, you need your address, you need your social insurance number, and you need your date of birth. Social insurance number or your tax identification number, it is important for you to have it because investing is a taxable item. That is why you need it, because a lot of people just pause at that point. When you hear, give me your tax identification number or your social insurance number, most people don't want to go ahead, but it is secured and it is required for you to be able to go ahead with your investing. Now that you've created your app, you've downloaded your app, you've created your profile on the app. The next thing, of course, is you've checked number 1 out of the 3 simple steps, right? Next thing you want to do is you want to choose the type of account you want to use to invest. Do we understand step 1? Downloading your brokerage app. Do we understand? Before I move on to step 2. Before I move on to step 2, do we understand step 1? Yes, no, no, yes. Is it because it's Sunday that we are so quiet? Okay, yes, thank you so much, Ashley B. Okay, now that we know that, the next thing is we want to do step 2, which is you choosing an account you want to use to invest, right? An account you want to use to invest. If you're just starting an investment journey, it's good for you to start with a non-taxable account or a tax-deferred account. I'm going to explain the difference between the two. A non-taxable account is an account that you don't pay taxes on any returns or any gain you make on that account. Okay, so let me use Mr. A and Mr. B, for example. Mr. A invests $10,000 in using a non-taxable account. Mr. A makes $1,000 from the market as gain. Because Mr. A has used a non-taxable account for that investment, Mr. A does not pay any taxes on the $1,000 Mr. A made as gain on their account. Okay, that's a non-taxable account. You don't pay taxes on the gain you make on your investment. Mr. B, on the other hand, invested the same $10,000, made the same $1,000 gain, but Mr. B used a taxable account. What happens to Mr. B is the $1,000 that Mr. B has made, Mr. B will pay taxes on that $1,000. So you can see the difference. Mr. A gets to go home with more money because Mr. A decided to use a non-taxable account. That is a non-taxable account. For a tax-deferred account, tax-deferred means you're not paying taxes right now. You're going to be paying taxes in the future, right? So let me use Mr. A as an example as well. Mr. A decided to invest $10,000, made $1,000 gain, but used a tax-deferred account as an investment account. It means Mr. A will not pay taxes on that $1,000 now. Mr. A will pay taxes in the future when Mr. A decides to withdraw that money, right? Maybe at retirement or the likes. If Mr. B, on the other hand, used the same account but used a taxable account, Mr. B will pay taxes now. That's the difference. So as a beginner, as you're going into the market, you want to have it at the back of your mind, what type of account do I want to use? Because when you use a non-taxable account or a tax-deferred account, it helps your money to grow fast. Just imagine the example of Mr. A and B. If Mr. B were paying a tax of $200 on the $1,000 they made, it means Mr. B goes home with $800, whereas Mr. A goes home with the same $1,000, right? You can see the difference. You might say the difference, oh, the money is not really much now, but wait till when you now start having millions in your account. When you start having millions, your money has now grown to millions in your account. You will see that at that point, the money will be much. So now I'm going to give you different types of non-taxable accounts or tax-deferred accounts that we can find in some countries. Now, if you're in Canada, I'm partial because I'm in Canada. If you're in Canada, you can start with TFSA, tax-free savings account. You can start with that. If you're in the US, you can use Roth IRA. If you're in UK, you're going to be using Stock and Shares ISA. Thank you for the likes. Stocks and Shares ISA is what you're going to be using if you're in the UK. If you're in Africa, unfortunately, you don't have any type of account like that, so you can just use your regular checking or investment account. Now, a lot of people, what they do is when they open the account on the brokerage app, they choose the type of account they want to use. The next thing they do is they just put the money in the account and go to sleep. You have not completed the process. That is just you at step number 2. We're actually going to step number 3. Thank you so much, Mr. Lance, for the likes. Right? We're actually going to step number 3. If you put the money in the account and don't invest it, you have only decided to put your money in the regular savings account. Regular savings account. You're not different from somebody that opened a savings account in a bank and put their money there. So now that we've done step number 2, which is us choosing an account we want to use to invest. Now we move over to step number 3. Do we understand step number 2? 1 and 2, do we understand? Yes, no, no, yes. Because that is the foundation. That is the foundation. Do we understand? And if you have questions, you can put it in the chat. Okay, thank you, sir. Yes, we do. You can put it in the chat if you have questions, and I'll try and answer the questions. Questions about the stock market generally. Or if you have questions about finances as well, you can put it in the chat. Okay. Now that we understand step number 2, the next thing we want to do is step number 3, is us actually investing, right? Remember, I said when you want to invest, you want to look, am I looking for income or am I looking for growth? There are 2 different stocks in the market. Now, step number 3 is for you to buy a stock or an ETF. A stock or an ETF is step number 3, right? What is a stock and what is an ETF? They are different. What is a stock and what is an ETF? A stock is you investing in a single company. Single, one company. I am buying the stock of company A. One company, me investing in one company. One company is a stock. An ETF, which is exchange traded fund, ETF, abbreviation ETF, is you investing in a basket of companies. What do I mean by basket of companies? You investing in a fund that has different companies in it, different stocks in it. In this basket, you have company A, company B, company C, company D, company E in that basket. So instead of you just buying one company, you're going to be buying a basket that has different companies in it. Now, I know the question that is running through your mind is, how do I know as a beginner, should I buy stocks or should I buy ETF? As a beginner, I would say this is for educational purpose, not a financial advice. It's good for you to start with ETF, the basket, and I'll give you my reasons why I think it's good for you to start with a basket, which is the ETF. When you look at ETF, I'll give you just 4 reasons. 1, it has low risk. What do I mean by low risk? When I told you that this basket has different companies in it, what does that tell you? All these companies will not crash at the same time, right? It means that you have lowered your risk of you losing all your money at the same time in the market. Of you losing your money at the same time in the market. Now, all of us, maybe most of us, you must have heard about BlackBerry before, right? BlackBerry, when BlackBerry was reigning, everybody wanted to own BlackBerry because it's just like the Apple of today, the Samsung of today, right? But where is BlackBerry today? Nowhere, right? So if you have invested in just BlackBerry, it's possible that you may have lost your money, right? But if you have invested in a basket of funds that has BlackBerry in it, what happens? That means they will take BlackBerry out from that fund and replace BlackBerry with another company. That is what would have happened, right? That is why, as a beginner, you can start with basket of funds because you are lowering your risk. You're just entering the market, right? And you want something that will give you an encouragement for you to want to keep going, investing in the market. You don't want something that will discourage you from investing in the market. So you can start with an ETF. If you have questions, let me know. So I'm going to use this remote as an example, right? This is a remote. In this remote, you have different buttons, right? You have different buttons in this remote. So we'll assume that this is a basket of funds. This is a basket of funds. So what happens when this basket, let's say this button is no longer working, this company is no longer in the market, what happens? We'll take this button out and replace it with another button so that this basket can keep going on. Right? That is what a basket of fun is. Just imagine it as a remote. This remote with so many buttons is the same thing as a basket, having so many stocks. Each of those buttons represents a company. Each of those buttons represents a company. Okay, that's an ETF. And I said it's lower your risk. Another thing is, even if this button stops working, what happens? Other buttons can still maybe perform the function, right? Which means we don't need to throw away this remote because we still have other buttons that are performing functions in it. Number two reason why it's good for you to start with ETF as a beginner is you have diversified your risk. Now, what does diversification mean in the stock market? Diversification means you're spreading your risk when you go with an ETF, a basket of funds. You're spreading your risk. Now, you've invested in a basket that has different companies in it. It means that you've successfully spread your risk across these companies. Because in these companies, it's possible that maybe you have companies that are into technology, you have companies that are into telecom, you have companies that are into hospitality, you have companies that are into maybe utilities, right? In this basket. Now, what happens? Maybe utility is not functioning well. Maybe utility stocks are down, right? If utility stocks are down, your technology is still there. Your hospitality is still there. It will hold your fund for you. So you have successfully diversified your risk by investing in a basket of funds. That's the second reason. The third reason why it's good to start with ETF as a beginner is you're going to be paying just one fee. So I'm going to use the remote again. This remote is so handy today. So let's say you want to buy individual stock. Remember I said when you buy stocks, thank you so much for the Ask Me Emperor. When you buy stocks, I told you you're buying just one company, right? So let's say you want to buy this stock. You want to buy this company now. That means you pay for this company, right? You hold it as one stock. You want to buy this company, you pay for this company and hold it as another stock. You want to buy this company, you pay for this company and hold it as another stock. But when you buy a basket that has every of these stocks in it, you're only going to pay one fee. You're only going to pay one fee for these baskets. They will tell you, oh, this basket will cost you $200, $50, $10. You'll be surprised that there are a lot of ETFs that are doing so well that are not up to 50 Canadian dollars or 50 USD, and they are doing so well. Okay, you're paying one fee. That's the third reason. The fourth reason, I said I was going to give you four. The fourth reason is they are managed. So what does management mean? It means somebody is actively checking using that same remote. Somebody's 9 to 5 is to come to their office, just as you're going to your own 9 to 5. They go to their own 9 to 5 just to check this portfolio. All this company in this portfolio, are they still performing? Are they meeting the requirements? If they are not meeting the requirements, what happens? They'll take that company out, put another company in it. You see that you don't need to do too much, right? Because somebody is checking. Somebody is checking, right? So you as a beginner, if you start with an ETF, you've diversified your risk, you've lowered your risk, you're paying one fee, and somebody is at the back end monitoring that investment, monitoring that bucket to be sure that it's meeting, the companies in that bucket is meeting its requirements. So these are the four reasons. There are other reasons, but these are four reasons why it's good for you to start with an ETF. Now, I do not rule it out that you don't need to buy individual stocks. You can buy individual stocks as well if you know that the stock is good and you can take the risk. But I'm just saying that as an individual, start with an ETF. Okay, If you have questions, leave it in the chat. If you can help me like the live, I would really appreciate it so we can bring in more people into the room. Okay, now that we know that we can either buy stocks or ETF, I know the next question that is running through your mind is, how much can I start with? Am I right? The question that is running through your mind right now is, how much can I start with? Because you've mentioned so many good things. So how much can I really start with? The truth is, you can start with any amount you have. Remember that at the beginning, I said the stock market does not care if you have down payment. It doesn't care if you have closing costs. It doesn't care if you have good credit score. Start with any amount you can afford. You can afford right now. Start with it. I can afford $10, start with it. I can afford $50, start with it. I can afford $100, start with it. I can afford 10,000, 1 million, start with any amount you can afford. The most important thing is you laying that foundation, and you starting is you laying that foundation. You're going to lay the next brick on that foundation. You lay the next brick on it, and before you know it, it becomes an high-rise building. But if you don't start, you would never be able to achieve the dream. Now, when I say start with any amount, you now ask the next question in your mind. I'm reading your mind, though. The next question in your mind is, you say start with any amount, right? What if the stock is $50 and I only have $10 to invest? There's something called fractional shares, right? There's something called fractional shares. Now, before technology, before all those apps and the likes, if you wanted to invest in the stock market before now, what happens is you go get a registrar or a broker, you submit your form to the broker takes it to the clearinghouse, they'll issue your shares at the clearinghouse. It might take a week for you to be able to accomplish that goal. But with the advent of technology, once you download your app, before the end of today's live show, live broadcast, you can actually buy your shares. You can actually buy your shares and be an investor in a company that you like, or an exchange traded fund that you like, right? Because once you download the app, you're able to invest. Now, going to the fractional investment. Let's say a stock is $50, right? $50 per shares, but you only have $10 to invest. That's good. I said start with it, right? That $10, you're going to put it in that your investment account. And what are you going to do? You're going to buy a fraction of that share, because technology has made it that easy for you to be able to buy a fraction of that share, right? You can buy 0.03, 0.02. You will still be able to earn money from the market, just like somebody that has 1 million shares in the market. Just that you will earn according to what you are in the market, right? You will earn according to what you have in the market. So you can buy a fraction, start with it. Now, let's say somebody that is doing $10 every week. $10 every week. Just okay, let me just put in $10 in it every week. I bet you spend $10 every week and you don't know what you spend that $10 on. But if you can just be putting that $10 aside and say, okay, I just want to try the stock market. I'm not asking you to put big money if you're not convinced, but I want to prove it to you that the stock market actually works, right? So start with, let's say you want to start with $10 every week. At the end of the year, which is 52 weeks, 52 weeks at the end of the year, you would have put in $520. That is 52 multiplied by 10. $520. That is what you would have put into the market at the end of 52 weeks. Right? Now let's imagine. Let's take a popular ETF, S&P 500, for instance. S&P 500 has top 500 company in the US stock exchange. When you count 1 to 500, that's what is in that basket. Now, since inception, since this basket was created, We've seen it do averagely 10% every year, average since inception. So let's say you've invested $10 every week. You have $520 at the end of the year, and you invest in S&P 500, for instance, and we use the average return is done over the years. That's 10%. That means at the end of that 52 weeks, you would have made $52 as return. Now, this return is unrealized. Unrealized means that you have not yet made it as gain. Until you sell, that is when you actually make it. That's when it becomes a realized gain, right? So unrealized, you would have made about $52. And I told you there are other stocks, there are other ETF that are not even as expensive that are doing so well. So well, that are doing more than 10%, that are doing more than 20% in 12 months. So just imagine that, let's even say you now buy an ETF that did 20% in that year. 20% of $520, that will be $104. On a $10, you can easily forget that you would have forgotten how you spent it. The $10 you spent last week that you don't even know what you used it for. You can't remember what you used it for today, right? You can't remember what you used it for today, but you can be setting it aside. You might think it's small. You might think is it not just $10, right? But that $10 can actually build up to become something. And it might not just be for you. It might be for your child. It might be for your child. You can say, I want to be putting $10 aside. I will keep saving till the child becomes 23 years. It might not be much, but when you give a child that just finished school, that just finished college or post-secondary school, you give that child and say, I'm gifting you a gift of $50,000 to start your life with. Do you know that you've placed that child above about 90% of his or her peers? Because a lot of them will come out of school with school loan, a lot of loans on them. But you've given that child an advantage over 90% of their peer. You might think $10 is small, but let's look at it on investment calculator. Thank you so much for the likes, Mr. Lance. Please, can you help me like the live? Please and thank you. If you have questions, please leave it in the chat. Okay, so I want to use investment calculator for instance. So what I do, investment calculator, you can just put it on your Google and it's going to give you. So I'm not going to be performing magic. If I go to investment calculator for instance, and I put investment calculator, let me just open it up. So let's say I want to start with the person, people that don't plan. Oh, Mr. Bruce, you're welcome. People that don't plan a financial goal 1 year, 2, 5 years down the road, they will have nothing. Absolutely correct. So let's say you want to start with that $10. I'm even saying start with any amount, right? So let's say it might not be much, but let's say, so let's say you're saving $10 for your child every year, every week. So I want to save for 20 years for that child. And let's even use the rate of return. I'm using the S&P 500, 10%. And you're going to be doing 10 every month. I'm going to be doing additional. I'm going to be doing additional $40 every month. For 20 years at the rate of 10%, I'm starting with $10, additional $40 every month. That's $10 every week. And I'm going to run my calculator. My calculator says that at the end of 20 years, what you would have contributed is $9,610. That's what you would have contributed so far. But this child will be going home with $28,797. That means this child will make a total gain of $19,000 plus. You not lifting a finger, just putting the $10 aside. And I told you there are so many stocks that will do more than this 10%. Because we just said this is average, right? This is average return over the years. There are years that it's going to do more than that. There are years that it will do below that as well, right? But just see what your $10 can do. So let's even look at somebody that is doing $100. Started with $100. You're doing $100 every month. Say other things remain the same. You're contributing for 20 years at 10% rate of return. Let's see. At the end of 20 years, you would have contributed $24,100. You'll be going home with $72,498 at 10% rate of return. At 10% rate of return. What is your total gain? Your total gain is $48,398. $48,398 is your total gain. Now, is this a good investment? Yes, no, no, yes. Bruce says with fractional buying, you can buy with $1. You can buy with $1. So what excuse do we have for not putting money in the stock market? What app is investment calculator, OD? It's not an app. Put it on Google. Just put it on your Google page, Google search. Just put investment calculator. It's not an app. On Google search, investment calculator, and just use anyone. You're going to see series that will come up, that will pop up. Just use anyone. It's not like a paid app or anything. It's a web-based something, right? So what excuse do we have when we can even start with $1? Can start with $1, like this $1. We can't say we can afford $1. It's just that we've not built that mindset enough. We've not built the mindset that we want to start investing in the stock market. And it's because we've not seen the power of compounding interest. We've not seen the power of compounding interest. That is why we do not have that zeal to want to invest in the stock market. Look at what we just checked. You invested $24,000. In 20 years, you're going on with about $78,000. And that is like with 10% rate of return. There are stocks that will do more than that. I know in my community, our ETF is doing a minimum of 36%. If I run that on investment calculator, a minimum of 36%, right? 36%. Every other thing remains constant. Every other thing remains constant. You started with $100, you're doing $100 monthly, and at a rate of 36%, you would have contributed $24,100. You'll be going home with 1.8 million, 48,000. That means your total gain is 1.8 million, 24,000. You'll be going home with 1.8 million, 48,000. Your total gain is about 1,824,000. Like, these are not guaranteed, but I'm just telling you that what the stock market can do for you. It's not like it's guaranteed. There are days that it's going to do below that. But if you audit, and can you repeat what you just said? Is it about the investment calculator? Because I know you're the one that asked about the investment calculator. So I said the investment calculator is not an app. On your Google search, put investment calculator. You're going to see series of it. Just pick anyone and put in your figures, right? And if it's the other one, the compounding one, the compound one. So now, I said when we looked at investing $100 at the rate of 10%, let me explain how compounding works. So when you invest, let's say you put $100 today, you get 10% return. That means you're getting $10, right? Now, you need to invest to get 1 million. So I said in my community, okay, let me explain how compounding works first. Then I will now come back to this, your question. You put $100 in the market today, you make $100. That's your gain. Now, what do you have? You have $110, right? That means the next gain you're going to be making is not going to be on $100. It's now going to be on $110. Meaning you get more money. That is how compounding works. When you don't take out your gain, you leave your gain, you add it to your principal, that gain becomes principal. So the next gain you're going to make will now be your new principal, which has gone up. Now, I said in my community, the one I did before was 10%, where we got the 78,000. I said in my community where I teach how to invest, I'll give you 8 ETF. You don't need to do the 8 ETFs because that's one mistake that most people make. They want to invest in a lot of, no, just pick one or two because I'm going to give in different sector. We have the growth, the dividend, the defense stock, right? You can pick just one from each. In that community, you'll get a minimum of about 36% from your stocks. Now, if you start with $100, you are investing $100 monthly. That means you start with $100, you keep doing $100 monthly, and the rate of return is 36%, and you do this for 20 years. At the end of 20 years, you would have invested $24,100. $24,100 is what you would have invested. What you'll be going home with is 1,848,000. 1.8 million. 840, sorry, 1,848,000. Now, what is your total gain? Your total gain is 1,824 because you invested 24,100. You're going home with 1,848. So if you net it, you have your gain is 1,824. What is the difference? The difference is the interest rate. The difference is the interest rate because person A and person B, they invested the same amount for the same number of time. But person A did the regular one 10%. Person B decided to seek knowledge and do 36%. That's just the difference between the two investors. Do you understand, OD? Or do you want me to run it again? Do you understand, or do you want me to run it again? So that is how compounding works. You using your money to work extra hard. Because I tell you that your money can work extra hard for you, more than you can do. Right now, you can't work 7 days a week, 24 hours a day, 7 days a week, 52 weeks a year. You will break down. You have to take rest at some point. But your money can do the extra work. Your money does not go on holiday. It doesn't go on holiday. It doesn't go on sick leave. It doesn't go on vacation. It's working. It's working extra hard for you. Yes, OD, $100 a month for 20 years at 36%. That's it. Okay. So now, like I said, start with any amount. And the next question that I know is running through your mind now is, I've heard a lot that people lose money in the stock market. Or, please, can I join your class, Prince Junior? Yes, you can join my class. So if you want to join my investing class, I'm just going to run through that before we continue the teaching. If you want to join my investing class, you need to click on my link, on my bio. Like you need to go to my bio. How do you get to my bio if you're on TikTok? You click on my profile picture, that profile picture that is showing up there. Click on it. It's going to pop up. You're going to see like a pop-up. You click on the profile picture again. It will take you to my bio. The bio has a link to my stand store where you can able to join. On this stand store, I have a pre-recorded class if that is what you like to do. I've already recorded it. I'll take you step by step, walk you through, and you'll get your materials. Excuse me. Or I have a master class coming up next week, Saturday. Next week, Saturday, a Zoom masterclass where we sit in class and we learn everything. Both links are there. If you want a one-on-one as well, the links are there. I think those are the 3 links you're going to see on that profile. If you're on Instagram, if you want to join the class, you can send me live and I will send you the link. Or you can just go to my profile as well. The link is on my profile on Instagram. On YouTube, I will drop the link right now in case you want to join the class. That is how you join Prince Junior. Yes, OD, all ETFs. I don't teach only ETFs, right? But this list will be all ETFs, the one for the 36%. But I will teach you individual stocks. I'll teach you what to look out for before you buy. I'll teach you dividend paying stocks. I'll teach you ETFs, and I'll also teach you real estate investment trust. Real estate investment trust. Not only that, you're going to know your risk profile. Before you invest at all, you want to know what kind of risk do I want to take in the market, right? You're going to do your investment goal. For every investment, for every stock in your portfolio, there must be a goal for it. If you don't have a goal, you will crash out of the market, right? But if you have a goal, it helps you to stay in the market. You're going to know your investment goal. And if you want bonus will be your budgeting template. A lot of people right now don't know where their money is going. You just know you're earning money, but you don't know where the money is going. So I'll give you a budgeting template that you can use to run your account to see where is my money going. That's just a bonus. It's not investing. It's a bonus. So it's all ETF. 36% is all ETF. And not only that, I'll also give you 9 ETF that contains all the classes, asset classes. I've only talked about individual stocks and ETF today. We have gold in the stock markets. Thank you so much for the flower, Odi. We have gold in the stock market. So even if you don't want to buy physical gold, one-on-one is good. Okay, yes, the link for one-on-one is also there, right? You don't want to buy that physical gold. You can buy gold. You can invest in gold, right? We have silver. Silver is also in the stock market. You have Bitcoin. You have cryptocurrency. They are all in the stock market. So I'll give you 9 ETF that will contain all the classes, all the asset classes, stocks, ETF, Bitcoin. But as a beginner, in as much as Bitcoin is good, crypto is good, I say stay with stocks first. Build that momentum so that you're not shaking in the market, because these are volatile stocks. Like you can see Bitcoin go up right now, immediately come down. And if you don't understand the market, you get to crash out of the market. So it's good for you to start with stocks and ETF. When you have your balance in the market, you understand what you're really doing in the market, then you can begin to take some higher risk, because the truth is higher risk will give you higher returns more than lower risk, right? Okay, so do we still have questions? If you have questions, let me know. And if you're going to the link, if you're making your payments, once you make your payments, if it's one-on-one, you get your Zoom link to you. If it's pre-recorded class, you will get your materials almost immediately. And you also have access to join the community. The community is a WhatsApp community where you now have access to myself and my team, where you can ask questions. I want to buy these stocks. What do you think? We have other like minds in that community, and that is what we're doing. Just building our portfolio, saving for the future, and the likes. So you get to have like hands-on, like you need help, you need something, you need clarification. This is also available in the community. Okay, so going back to our investing, right? Going back to our investing. I like to say, because most people say, I've not started investing because I just feel I don't really know how much to start with. Is it for those in Canada? No, it's for anywhere. Canada, US, UK, Africa. Canada, US, UK, Africa, anywhere, right? But the fund is in Canadian dollars because I reside in Canada. But the course is for everywhere. If you join the group, you're going to see. I think on the testimonials, there's somebody from UK that wrote a testimonial there. The person Tunde, I don't know if it's on this one or if it's on the other website, but Tunde is based in UK. And I have some people on the group that are also based in UK. I have US as well. I think I have one Australia in the group. Okay, so it's anywhere. Okay, now a lot of people say, I want to start investing. Okay, I'm going to invest $1,000 by the end of this year. I'm going to invest $1,000 by the end of this year. You will discover that you're not able to achieve this dream, especially if you're just starting, because that $1 becomes so big to you, right? It becomes so big to you. So what do I tell you? I tell you, break it down to the tiniest piece that your mind can easily conceive, right? Oh, okay. So Lance says to Prince J Jr., once you learn, you can apply the knowledge to global stocks since you can buy US stock from anywhere. Yes, investing is the same principle everywhere, all over the world. Is the same principle. How to read the chart is the same principle. So what works in Canada will work in Africa, will work in US, right? It's the same principle everywhere. Okay. Now, I said break your investment goal, the goal you have for this year, break it to the tiniest principle, to the tiniest bit, so that your mind is able to conceive it. Now, how do you break it down? This is not only applicable to investing, any goal you have in life, break it down to the tiniest principle. So let me break it down for somebody that wants to invest $1,000. They are just starting the journey, and $1,000 looks so unachievable, right? So $1,000 in 12 months. $1,000 in 12 months. So I'm going to use 1,200 so that I'm able to calculate it. So I'm going to say I'm going to be doing $100 every month, right? $100 every month. 1,200 divided by 12. That's $100 every month, right? Now, even that $100 every month is still big for some people. $100 every month is still big for some people, right? Now, I'm not going to break that $100 down. How many weeks do I have in a month? I have 4 weeks in a month, right? So I'm going to say I will be doing $25 every week. $25 every week will give me $100 every month. At the end of 12 months, I will have 1,200 invested. Now, $25 might still seem big, right? I can now break it down to 5 days. I work 5 days a week. So every day I work, I will put $5 out and invest it. Nobody here earns $5. I want to believe. I've not seen a minimum wage that is $5. That means if you're saying you want to invest $5 every day, you work 5 days a week, that means you're even investing below your 1 hour minimum wage, right? You're investing below your minimum wage. But what does $5 do? Your mind is able to conceive it. It's just $5 now. Every day, don't I waste $5? Your mind is able to conceive it. And when you start putting the $5 down, you might say, okay, this $5, maybe you are paid bi-weekly. That means you already know it's $50 because $5 every week, every day, 5 days a week, times multiplied by 2 weeks, that's $50. So when they pay you, do an automatic deposit. There is nothing that makes you disciplined more than an automatic deposit. When you are paying your bills, your mortgage, your phone bill, your hydro bill, what do? You do automatic deposit, automatic debit, right? To pay those people. That's because you don't want to forget those bills. Because you know if you forget those bills, number one, it affects your credit score. Number two, you're going to pay charges on it, right? So that is the same thing you're going to be doing for your investment. So if I know I'm going to be doing $50 bi-weekly, I am going to set an auto deposit from my account for $50 every week. And there's a way you can set it up on your app. I'm paying this $50. From this $50, put $20 in this ETF or this stock. Put $10 in this stock. Put $10 in this stock and go to sleep. And go to sleep. The system will do the work for you. It will do the heavy lifting for you. So set it up. At the end of 12 months, if you are consistent, you would have done $1,200. You would have done $1,200. $25 every week, $5 every day, multiplied by 5 days, just 5 days. You're not even doing 7 days a week. 5 days. You would have done $1,200 at the end of 12 months. Now, just imagine that you invest in a stock like the one in our community that does about 36%. So I'm going to round it up to 40%. I don't want to use calculator, right? 40% of 1,000 of 1,200. That's what? 10% is 120. 20% is 240. That 40% will give you about $480. About $480 on your 120 investment. Now, the question I have for you is, can you afford $5 every day? Can you say this $5, I just want to put it in the market and risk it? Let me assume that I'm losing this $5 every day. Can you? Because I know if you put it in the market and you buy good stocks, thank you so much for the likes, Coco Sweet 67. If you buy good stocks or good ETF, you will not lose your money in the market. You will say, why am I so confident? I am confident. It is what I am doing. And I know it because I've been in the system. I know it. And I'll tell you two other things. Number one, why I am confident that if you leave your money in the market, you would make money from it, is the wealthy would always put their money in the stock market. Bring 10 wealthy people and ask them, what are your sources of income? Between number 1 and 4 on the list of the sources of income, you will see investment in stock market there. Because that is you making your money work for you without you lifting a finger. You don't need to know the company. You don't need to know the MD of the company. You don't need to know the workers of that company. Right? And you still be able to achieve your dream. The wealthy will not put their money where they will not make money. Have you seen a wealthy man put their money in a place that they clearly know that this one is lost, I'm going to make? It is not possible. And that is why they would never tell us, or they will never tell people that come to the stock market. The only news you're going to be hearing is, oh, you lose money in the stock market. You lose money in the stock market. Well, yeah, you lose money in the stock market, but Mr. Wealthy Man, why have you not taken your money away from the stock market? Why have you not? It's not possible because they know that they can make money from the stock market. Number 2 reason I know that I am confident that you will make money if you do good stocks or good ETF. Underline my word good, right? Not anyhow. Is if you look for a company right now that you love so much and you know the company is doing well, right? If you put that company, just put it on Google search. Mr. A company share price. Put it on Google search and look at their 1-year graph. Look at their 5 years graph. Look at their 10 years graph. Have they made money? If they've made money, it tells you if they've done it before, there's tendency for them to do it again. Because our projection is always based on past performance, right? We don't know what will happen in the future. But we can say that if this company has made 20% return in 1 year, there's tendency for them to make another 20% return in another year. That is why I am confident. Aside from my results, that is why I am confident that you will make money from the stock market. Do we have questions? Do we have questions? Do we understand everything we've been saying? Yes. So that is why I am confident. And I've told you, start with any amount you have. Buy fraction. Bruce told us, buy fraction. Whatever fraction, even if it's 0.0001, buy it. It is written in your name. Another thing that somebody is thinking right now is, what if the app I'm using to invest crashes? Because these are some of the questions that I get, that people send to me, right? What if the app crashes and my money disappears? Your money will not disappear. The app is just a medium. The investment is in your name, right? If you buy a stock today, you're going to there's a certificate you can download from that app. It carries your name. If the app crashes, all you need to do is to go to the next app, create your profile, and move your stocks over to that app. And life goes on. So don't be scared. If you're not scared of your bills going up, why should you be scared of making money from the stock market? We're not scared of that. Oh, that my landlord is going to increase my bill next year. But we're so scared of putting that money in the stock market and let the money work hard for you. The 5,000, some people have $10,000, $20,000 in their savings account. Last month, I was talking to somebody. The mom came to this live show like this, and she joined the investment class, and she told me, oh, I would love you to speak with my 18-year-old daughter. I said, no problem. And we booked a one-on-one. And I asked this 18-year-old, how much do you have that you want to invest in? Apparently, she has over $5,000 in her savings account. She has over $5,000 in her savings account, just sitting there. She's looking at the savings account. The savings account is looking at it. Coco Sweet 67 says, can you talk about reading the candlesticks? The thing is, if you want to talk about reading the candlestick, it's good when it's visual, right? When it's visual, so you can read it, you can understand it. If I'm explaining it like oral like this, you might not get it. But those are the things that we do that will be taught in the community. In that training, that is what you're going to learn. Like, I'm not going to be, it's not physical, like just talking to you. We're going to open the system. We're going to do practical. Like, you read the chart yourself. I'll tell you, okay, this is what you look at for. This is how you read the chart. That is what you're going to be learning. If I tell you, just telling you the candle stack, this one stands for red, this one stands for green, this one stands for increase, you might not really understand because I'm not showing you. It has to be visual for you to be able to understand. But if you join the community, like I said, you would get all those. Those are the trainings you're going to get in that community, as in the training before you now join the community. Okay, I hope that answers your question. Okay, so now going back to that, my 18-year-old, I said she has over $5,000 in her account. And after the one-on-one, we're able to set up our account. We set up automatic deposits and the likes. And at the end of the life, I told her, I said, you will be glad in 6 months' time, in 12 months' time, you will be glad that you actually went through this process, because right now you're about 80%. 80%, you're higher than about 80% of your peer. You're ahead of them by you starting your investment journey now. An 18-year-old, I'm so sure, does not understand anything about investing. I had a class yesterday for 18 to 25. 18 to 25, when it was the class I had yesterday. And you'll be shocked at the amount those people are having in their savings accounts, just sitting there, not knowing what to do with it. And you can't compare an 18-year-old in the stock market with a 60-year-old in the stock market. It's not comparable. The kind of risk an 18-year-old can take is far higher than the risk a 60 or 50-year-old can take, right? So the earlier you start, the better as well. That's why I looked at the one for your child. And it's not only you that can invest. You can invest for your child. You can invest for your child. Imagine that your child graduates, like maybe you're doing $100 for your child. In that example that we looked at, you're doing the 36% one. The child, maybe your child is 2 now, maybe by the time they're 22, that's 20 years. You just decide to hand over close to $2 million to that child. The child can decide not to work. You don't know. Just put that 2 million. The child just put the 2 million and the child puts it in an investment that is giving the child maybe 10% return annually. 10% is all it needs. 10% of 2 million is how much? 200,000. Now, how many people go to 9 to 5 and earn 200,000 every year? Because we've not taught to that point. We're only looking at, oh, I'm doing 100. Look at the end point. Look at the end point. Just imagine that maybe you're even 40 years old now and you start the journey, and in 20 years, you have maybe $2 million. Right? You have $2 million in your portfolio. And you just take your $2 million, put it in an investment that is giving you 10% return annually. 10% of 2 million is what? It's 200,000 every year. Now tell me, will you not be able to live the life you're living now? Will you not be able to maintain your lifestyle? You don't need to depend on government pension. You don't need to depend on government pension. You will still be able to maintain that lifestyle. But how do you get to that point if you don't start? That's the question. If you don't start, how do you get to that point? You need to take the first step, lay that foundation, put the next brick on it, add the next brick on it, and before you know it, it becomes an high-rise building. I love to use that analogy very well. I love to use that analogy Because when you lay the first brick, nobody sees it. It's a foundation. If you lay the next one, it's possible nobody sees it. When you lay the third one, it's possible nobody sees it. But right time you're getting to the 10th one, it's become visible. People will say, oh, so they're building a house here. Before you know it, it becomes an high-rise building. Oh, people will say, oh, I even thought it's a two floors that they are building. Wow, it's a high-rise building. But because you started, if you did not start, that high-rise building would not have come to pass. And as we started in the beginning, we say, even if it's rental income, my goal, my dream is to earn rental income, right? Is to earn rental income. You can achieve it through the stock market. You don't need that huge down payment. You don't need a good credit score because the stock market does not care. My credit score is 300. Oh, they said they can't give me interest. They can't give me loan from the bank. The stock market does not care. And you'll be able to achieve that dream. You'll be able to achieve that dream. There are some stocks that are $19, $14. They will do 30% return in a year. Because everybody talks about S&P 500. It's good. I have S&P 500 in my portfolio. I'm not criticizing that it's not good. It's good, right? But I'm also saying that even if you want to start with some stocks that are not as expensive, you still get a $20 stock. That will do well. A $50 stock, that will do well. Even fraction, buy the fraction. Don't mind. I don't have $10,000. Don't mind it. Start with what you have and still be able to achieve that dream. The dream is for you to get income, right? The dream is for you to grow your capital. So if I can't grow my capital this way and there's an alternative way, legit way that I can grow my capital, I'll take the alternative way because it's easier for me. Because it's easier for me. Now, do we have questions? Do we have questions? In this class today, we've mentioned that you can achieve your dream of making rental income through the stock market. You can achieve your dream of making income, making money through the stock market. You can start with any amount you have. We said the first step is for you to download your brokerage app, create your profile on the brokerage app. Second step is for you to choose an account, right? Choose an account that you can use to invest. And I said it's good for you to start with a non-taxable account or a tax-deferred account. The third stage is for you to buy a stock, you invest in an individual company, or you buy an ETF, you investing in a basket of companies, right? And I said you can start with any amount because the apps will allow you to buy a fraction. So you don't need to have the full amount of that share for you to start. Start with a fraction. Buy fractions year by fraction year. Before you know, it becomes 1, becomes 2, it becomes 3. Example of ETF that will give is a combination. But we have ETFs that are doing 36%. We have single ETFs that are doing 36%. But like I said, in my class, you will get about 8 different ETFs so that you can also spread your risk. And I said it's not going to be in one sector. You have the growth, that one that capital would appreciate. You have the dividends, the one that will pay you dividends. You have defense stock. All are listed in that book, right? But if you want stocks that ETF that will do 36%, yeah. I have one ETF that did about 28% last year. Yeah, 28% last year. And if you look at it, if I click on the 1-year stock today, let me even see what the stock is doing. But I'm not giving it out to do. But let me just see what is done in the last 12 months now. I'm so sure it's done so well because it's in the last 12 months, it's done 35.68%. That's between February 18th. Today is what? Today is 15 now. Between February 18th and now, it's done 36%. And guess what? This stock is about $20, 20 Canadian dollars. Like I said, it's for my members. It's for my members. It's for my paid class. but it's done 36%. Last year, I know it did 28%, but looking at from last year till now, like 12 months, it's done 36% return. So what does that tell you? If you had bought this stock 12 months ago, you'd have bought it at $15 per one, right? If you're selling now, you'll be selling at $20. That means you've made $5 gain on your $15 investment. So that's it. So do we have questions before we call it a night? Okay, so if you don't have questions, like I said, I love to teach investing in the stock market because that is what I do. That is what I do. I teach people how to invest. But please note, I will not invest on your behalf because I know a lot of people might want to reach out to you at the end of this life. They might be impersonating me. Yes, Bruce, thank you for that. So join Wet Simple, get $25. You didn't have, and start then add $10 a week. That's it. I said it at the beginning that when you want to join Wet Simple, if you want a referral code, I can gladly give you my referral code. You will get $25. So even if you're so scared that, okay, I don't want to put my money in the market, use my referral code to get $25. Now add only $5 to it. That makes it $30, right? Buy stocks. Buy it and see what it will do. And see what it will do. Because I'm not sure why we are so scared. Like I keep saying, we are not scared of our bills going up. You're not scared of your bills increasing, but you're so scared of making your money work for you. If you want my referral code, let me know. You can put one in the chat. If you want it, I will give it my referral code. If you want the referral code, I can give it to you. Okay? But if you want to learn how to invest, seriously, if you want to learn how to invest, just get the course or you join the masterclass to learn how to invest. But the money you're paying for the masterclass or the course is less than a 5-star. And I'm so sure you have given it out this year. I'm so sure. Somebody has called you and say, please, urgent 2K, urgent 5K. If you calculate all those, why not use it for yourself as well to learn? It's a skill you're learning. A skill you can teach your spouse, a skill you can teach your children, your great-grandchildren. See it that way. See it that way, that this is a skill I am learning. Okay, so I normally come, or okay, like I was saying, people might come to your inbox to tell you come and invest and the likes. People said people buy lottery tickets and aren't scored odd and are terrible, but buy them every week. I tell you, people go and buy lottery tickets and you are hoping. You're just hoping in your mind and you're praying, I hope I will win. And the next week you don't win, you still go back again. I hope I will win. Come and put that money in the stock market. Start building it in the stock market and stop hoping. Okay. So if anybody comes to your inbox, it is definitely not me. I don't invest on your behalf. I would only teach you how to invest. I will not come and message you first. If you don't message me, I don't message you. I am not that desperate. What we've learned in today's life, what you've learned in this live broadcast today, you can go and run with it, right? And that will be my joy, that you go and run with it. But just like I said, if you want to learn more, then you can take a step further. What we learned today will still give you good return. Open your brokerage, choose your account, buy your first ETF, and keep going, right? But if you want to learn more, that's for the other class. And if anybody comes to your inbox, it is not me. Everything we've said on this live today is for educational purpose. It is not in any way financial advice. It is for educational purpose, just educating ourselves. Okay, so I normally come on live like this in the evenings between 8 p.m. Central and 9 p.m. Central. And what I do is just teach about investing. Investing is my baby though. But at times I do teach about how to make money or how to manage your money. Just at times, because I know we need money to be able to invest in the stock market, right? So at times I teach how you can make money, how you can grow some other skills so that you can bring some other money into your pocket and for you to start investing. If you've not followed me, please do follow me so you know when I'm live and you can join us on in the class. It's possible you don't have questions now, but maybe after you've gone to bed, you've thought about it, you might have one or two questions. You can follow me so you can know when I'm live so that you can join the class. I hope we learned something in today's class. Now, it's not that because I've used 1 hour, 30 minutes on this live. That's always my target, 1 hour, 30 minutes. And I just hope that it's not that I just came to talk for 1 hour, 30 minutes. We actually learned something from the live today that we can apply. A lot of us will go back from this live excited. I want to start. I want to start. But if you don't take the step now or immediately, things and works of life will take it off your mind and you will push it to another day. So if you've not downloaded your app, please, at the end of this class, download your app. There is a mindset behind you downloading that app alone. And I will tell you, the mindset is when you download that app, each time you flip through the apps on your phone and you see the app, what it does is it reminds you that you need to start investing and you want to take the step towards that. But once you don't download the app, there is nothing reminding you, and you don't come across a live show like this again, then what happens? So that's what I'm saying. You are excited now. This is the time for you to download that app and start the process, right? Start the process. So thank you so much for joining today's class. I appreciate your time. I appreciate the comments. I thank you for all the gifts. Thank you for the likes. Thank you for making the life engaging. Thank you for the share. Without you, you're the one that always encouraged me to come out every evening and come and do some teaching. Thank you so much for the likes, ERP Consultant, right? To come and do some teaching. It's my pleasure to come and share my knowledge online and to help our community, because I've seen that a lot of our community members do not want to, as in we are behind in terms of investing, right? So that is why this is my way to give back to the community. And one more thing before I go. I was scrolling through the app, TikTok app today, and I saw something that was so disheartening to me. A lady, I'm not sure if most of us have seen, I think the video is going viral. A lady, I think she lost her spouse and she went for the funeral. And when she got back, she was laid off. Apparently, they've been going through some challenges and the spouse didn't have a life insurance just because finances has been tight. Now, I am begging you, my community, life can happen at any time. Life can happen at any time. If you don't have a life insurance, either from your work or personal, please get one. There are so many life insurance that are affordable. You can get a 10-10. A 10-10 means that you're holding it for 10 years. With $20, $30, you can get something. You can get something. So that, especially if you have families, you have a spouse, you have children that are depending on you, please, I am begging you. This is just my parting word, because I felt so bad this morning. She from her story, they actually had life insurance before, but at some point they could no longer pay for the life insurance because life became difficult and the life insurance expired. But like I said, get a life insurance, please. Get it, especially if you have family. If you are single, you are the only one, nobody is depending on you, then no need. But if you are not single, you have a family, you can get it from your workplace. $4, $5, you will get it from your workplace. That $5 is not what will make you rich. So let's take that mindset off. If you don't have from your workplace, maybe because you are not a full-time staff or something, get a 10. 10 is very cheap. Even if it's just 150K, 100K, it will help your family if anything happens, right? If anything happens. I just saw it on TikTok and I said, I'm going to share it in my life that please get a life insurance. If you can afford the one that has investment, maybe the universal life, the whole life, it's better. Because if in case if you don't even have money at some point, you can place your life insurance on hold. You can place it on a premium holiday. That is what it's called. Just call your advisor. I want to place my insurance on a premium holiday. There are some premium holiday that will take you 2 years, 3 years. And what happens, even if anything happens to you within that period that you're on premium holiday, your family would still get the benefits. Your family will still get the benefit. I know this is not a life insurance class. I'm just telling you just because of what I saw on the news, and that is, I said I was going to share. Bruce says, I made money because I had to. Okay. Lance said, we don't need to wait until an eventuality happens. That is the simple truth. We don't, like, I almost shed tears this evening because just coming from your spouse burial and you're resuming, she didn't even have time, right? She didn't even have time to mourn. You can imagine that a loved one just passed away. But because of the financial burden that they're already going through, she has to resume. She was coming from the funeral and she had to resume, only for her to get to the workplace and they fired her. Now she has 2 children to cater for, and the spouse does not have a life insurance. Please, I'm an advocate of life insurance. I don't sell life insurance, but I'm an advocate. Please, I am begging my community. I know we don't like it. I know, but life can happen at any time. That's one thing we don't know when it will happen. That's one thing we don't have control over. Even the wealthiest person does not have control over that. And also, this is Bruce. Bruce says, my wife got dementia 10 years ago. Knew one day I'd be paying big nursing home and would have to. The truth is, would Bruce have thought maybe 15 years back that his wife would have dementia? No. No. Right? No. There's nobody that plans for bad things. But what if it happens? Just like I said, it doesn't have to be that expensive. You don't need a 1,500. You don't need a 300. You don't need, just get something as little as what your purse can hold for you, especially if you have family. If you have family, please, I am begging. This week, if you don't have, if it's from your workplace, get it. Even if you can't afford anything, maybe that $5, $4 is what you can afford from your workplace. Get it. At least let that one be in place. Let that one be in place. Why you now look for your own personal one that you can afford as well. A word is enough for the wise. I don't know who this word is meant for. I don't know. Seriously. I don't know. But when I saw that video, I've never seen that lady on my feed before. I don't know why it came to my feed today. Maybe because the video is going viral, possibly. Maybe because it's going viral. And it came to my feed and I'm like, what? How would this lady cope with 2 children without a job in US? Honestly, I don't know. But that ends the live show today. Do we have questions before I call it a night? It's time to go to sleep. Tomorrow is work day. I know a lot of people are having holidays tomorrow. Unfortunately, I don't have holiday. My company is a federal company, so we don't get to get provincial holiday. And I'm so jealous because a lot of people have called me, oh, are you going to be on holiday tomorrow? I said, no, I'm working. Okay, so if there are no questions, we're going to end the live today. Like I said, I do come on live evenings like this. If you've not followed me, please follow me so you know when I'm live. I appreciate your engagement. Mr. Lance, thank you. Mr. Bruce, thank you for the contributions. And everybody that asked their questions, thank you. And thank you for the follow. Thank you for the gift. And I'm going to see you, Mr. Sheun. Thank you for the likes as well. I'm going to see you guys tomorrow, God willing. But be intentional, right, about your life in 2026. Don't live it the way you live 2025. Let's be intentional so that we can become a better version of ourselves. I'll see you guys tomorrow. And until then, remain blessed and God bless you. How long have you been investing? Mr. Bruce, I started investing in Canada about 4 years ago. Okay.